The stock market is buzzing with anticipation as Nasdaq and S&P 500 futures show promising gains, hinting at a potential rate cut in December. This news has investors feeling optimistic, especially after John Williams, the president of the New York Fed, left the door open for a rate adjustment. In his speech, Williams emphasized the need to move the federal funds rate closer to the neutral range, a statement that has sparked a lot of discussion among market watchers. But here's where it gets controversial. Some analysts are questioning the wisdom of a rate cut, especially in light of the current economic climate. With inflation still a concern, is a rate cut the right move? As we await the Fed's decision, let's take a closer look at the market's performance. Futures for major benchmark indices are up, with the Dow Jones, S&P 500, Nasdaq 100, and Russell 2000 all showing positive changes. The SPDR S&P 500 ETF and Invesco QQQ Trust ETF, which track these indices, are also trading higher in the pre-market. In terms of individual stocks, Pony AI, WeRide, Alphabet, Zoom Communications, and Keysight Technologies are all in the spotlight. Pony AI, for example, announced a partnership with Sunshine Mobility, which has boosted its pre-market performance. However, according to Benzinga's Edge stock rankings, some of these stocks, like Pony AI, WeRide, and Zoom Communications, are showing a weaker price trend over the short, medium, and long terms. And this is the part most people miss. While these stocks might be struggling, Alphabet is maintaining a stronger price trend, with a particularly strong quality ranking. As we move into the week, investors are eagerly awaiting earnings reports from companies like Dell Technologies, HP Incorporation, Deere and Company, and Li Auto. The 10-year Treasury bond yield is at 4.05%, and the 2-year bond yield is at 3.51%. According to the CME Group's FedWatch tool, there's a 73.5% likelihood that the Federal Reserve will cut interest rates during its December meeting. But here's the catch. Prominent economic voices are raising concerns about U.S. stability, pointing to market concentration and policy choices as potential risks. Investor Ruchir Sharma warns that American exceptionalism is peaking, and that the economy's reliance on AI could lead to deep fiscal vulnerabilities. Mark Zandi, Moody's chief economist, adds to these concerns, highlighting a potential affordability crisis due to specific policy choices like tariffs and immigration restrictions. So, as we navigate this complex market landscape, one question remains: is a rate cut the right move for the Fed? What do you think? Share your thoughts in the comments below.